Hello everyone, the chart guys have been working on an introductory technical analysis course for some time now, and after surveying hundreds of traders, we narrowed down what the most sought after information was, and we created this course, Entry and Exit Strategies. It's over 5 hours in length, and we go over different signals that the charts tell us for when to buy and when to sell. If you are the kind of trader that is still looking at charts and not realizing what it is trying to tell you, still feeling a little bit overwhelmed, this course is designed to alleviate that uncertainty. So the course outline, we're going to go over the psychology of trading, establishing a game plan, recognizing the different indicators signaling bullish and bearish entries, being able to identify support and resistance levels, poor entries where traders make mistakes and how to avoid them, exit target, knowing where to sell your positions, where to place stop losses to keep those losses minimal, my personal preparations, how I get ready for the trading day, and then piecing it all together, looking back at everything we just learned and applying it to the real world. As a bonus, we'll also look at an intro to finding entries and exits with patterns, and you'll recognize these patterns on all kinds of time frames throughout the stock world, so certainly beneficial to be able to trade off of those as well. So we hope you will check out this course, and again, we feel it will build a foundation of technical analysis knowledge that experience will build off of and send you on the right direction to making more profitable trades. Checking in on Twitter on the daily and weekly time frame. So we had a bullish breakout. You can see this 100-day moving average resistance was knocking the price down back in mid-November, rejected it here again at the end of November, and then a big breakout on high volume above that level. It is looking like a bearish reversal candlestick, almost a doji here after this breakout, so that would indicate short-term consolidation. But the fact that we broke this lower high pattern when the bulls were able to get above 1951, that was significant. And we now have the higher low and higher high pattern continuing. This gap fills at 1964, so we've filled that gap. And we're looking at resistance 21 even before we start filling this gap up here. So the bulls are still in control. It's been slow and steady. Bulls had to wait through 3 weeks of consolidation before another move to the upside, but the bulls are in control of the daily time frame. We look at the weekly time frame and can see that dump and then that higher low and now a higher high. So working back on trying to reverse this weekly trend that had a very big setback, on the verge of a bullish MACD cross, close up near the high of the week on increasing bull volume. And you can see on the weekly chart there's not a ton of resistance up here until that $21 level. So we could see another 5% to the upside here out of the Twitter bulls, but the daily chart does need some consolidation. We can see how these moving averages are lining up, 20, 50, and 100 day. They are all between 1861 and 1881. So if we consolidate a little bit, that's a nice target in the upper $18 range, and you could exit as a bull if we were to lose those moving average supports. And the key support to hold is this 1773 consolidation low down here. That's a must hold on the daily time frame for this higher low pattern to be intact. So if we do consolidate, let's start that again. If we do consolidate to start this week, it is definitely worth looking for a bullish entry around those moving average supports. We'll see how it plays out. I appreciate you watching. Have a great rest of your weekend.